Hello, and we want to welcome you to our call today with Ed Newton, CPA, CFP, and President of Newton Financial Network, as well as the creator of the website, FlightCrewTaxStrategies.com. On today's call, Ed is going to discuss minimizing taxes for flight crew members. If you're not already a client of Ed's, he's originally from Huntington, West Virginia, has a degree in accounting from Virginia Tech, and a master's degree from Liberty University. Ed landed at Arthur Anderson and Company in their tax department and then began his CPA firm in 1977. He's a CPA and a certified financial planner and is uniquely positioned to help clients achieve and sustain a worry-free retirement. And if you do know him, you know Ed has also been a commercial pilot for a major airline since 1982, and his current weekend routes are to London, England, and Frankfurt, Germany. Ed, good morning and welcome to the call.
Well, good morning, Jeff. Thank you very much. And I'd like to also add my welcome to everyone that's on the call today. We have a good crowd. And this call is designed specifically for airline crew members. And since I am one of you, I do know that we all are concerned about our taxes. Also, I will just say, Jeff's comment about my current weekend routes. I am playing the contract right now and taking off the months of February, March, and April so that I can be sure and get everyone's tax returns done expeditiously. So even though I normally fly Frankfurt on the weekends, I'm taking off these months completely. So at any rate, again, what I'd like to do today is talk to you primarily about the per diem. At the end of it, when we open it up for questions, if you do have questions about some other expenses that relate directly to airline industry, I'd be happy to handle those. And if you have questions maybe that would be somewhat outside the airline industry and therefore not necessarily of interest to everyone else, I'd be glad to handle those with you separately offline. So with that said, let me give you a little bit of an overview of the per diem for airline employees. Most of you, if not all of you, are familiar at least with the fact that we do have some special rules and regulations that apply just to folks in the transportation industry. And so I want to hit those for you. This has been around for a long time. I have IRS documents going back at least as far as 1997. And they go back even further than that. But at any rate, what we have, the current law, if you will, and it's not technically a law, but it is an IRS pronouncement, Revenue Procedure 2011-47, and all of the predecessors that go before that, is what sets out these very special rules that apply only to members of the transportation industry. Now, that means it applies not only to airline pilots and flight attendants, but it also applies to over-the-road truckers, anyone that has any sort of authority under the Department of Transportation. So Revenue Procedure 2011-47 is the one that we want to look at and discuss today and talk about how those provisions work. We also need to separate what is called CONUS rates, or continental U.S., and OCONUS rates, which are other than continental U.S. The CONUS rates apply to the 48 contiguous states of the U.S., and currently under that revenue procedure that I brought up earlier, as well as a notice that the IRS has just put out back early this month. It was notice 2012 I do want to find that for you. Give me just a second here to see what that was. I'm sorry. I can't put my hands on it right now. But that notice, the one that I'm talking about, all it does is just update the current year amounts. That for the CONUS, or those of you that fly only domestic routes, that is $59 a day. The OCONUS rates, or what I like to think of as the famous Ed Newton rates, as we do put those out for the crews, every year. Those rates are specific to a city and a month. And I will speak with you in a few minutes about how all that works, but I just want to give you an overview there of the rates. Again, if you're traveling domestically, flying domestically, it is $59 a day. If you're flying, outside the United States, Alaska, or Hawaii, then you use the OCONUS rates, which are found in the State Department's website, and again, we publish those as well. If you have not gotten those and you do need those, you can go to flightcrewtaxstrategies.com, and we'll be happy to send you a copy of those OCONUS rates. I also want to give you just an overview. I'm not going to try to get into each individual schedule and which line and all that kind of thing, but I do want to give you an overview of how the per diem amount is computed. There does seem to be some confusion about that. I have also picked up gotten new clients in that have done it in the past, and sometimes the tax preparer, not being used to seeing an airline person's W-2 and or their expenses, may have treated it incorrectly. So what you want to do first is you compute the allowable amount, and that again goes back to those rates, how many nights you were away, and that sort of thing, which does get somewhat cumbersome. I don't want to try to give you those specific details, but you do compute the allowable amount, the total amount of your per diem that's allowable under the IRS procedures. I will speak very quickly about proration of days. Every day that you're gone, the complete day, the entire day, you do receive a full day for that. On the day you leave and the day you return, you may use 3/4 of a day for each of those days. So if you have a 3-day trip that no matter what time it goes out the day, even if it leaves late the first day, you can take 3/4 of a day for that. You get a full day for the day you're on the road, and the day you come in, the third day of the trip, again, even if you were to come in at 9 o'clock in the morning, you would still be able to take a 3/4 of a day, or for a 3-day trip, you get 2.5 days. Once you've computed the total amount of your per diem that is allowable by the IRS, the next thing you have to do is you have to subtract the non-taxable portion of your per diem that you've received. Now, that non-taxable portion is the portion that the company has paid you over the course of the year, but they have not been required by the IRS to include that in your income. That number is located in box 12 with the code of L, as in Lima, of the W-2. So now that you have the full amount that you can deduct, you then add back or subtract, however you want to look at it, but you reduce the amount of those allowable expenses by the non-taxable reimbursement in box 12, code L, Lima, of your W-2. You take that result, and that gets multiplied by 80%. Again, the airline crews do have a special rate here with this 80%. For most people, it's 50% of their meals and incidentals that they're able to deduct. Congress, through probably some good lobbying of some of our unions, has made it possible that we get to deduct 80% of that amount. Once you get the 80% amount, then that goes over to your itemized deductions, Schedule A, under miscellaneous itemized deductions, subject to the 2% floor, or 2% of your adjusted gross income. For pilots that belong to a union, that 2% is easily overcome, because that's just about what all the union dues are, 2%. So you would be able to take the full amount of the per diem after that. For flight attendants, when you throw in some of your other expenses that are allowable, put in some of those, such as your uniform cleaning, your dues, you still should be able to get over the 2% and be able to have a nice additional deduction for the per diem. I have had several folks over the years ask me about the alternative minimum tax and how that's affected. If you are subject to alternative minimum tax, then you may or may not lose some of the benefit of the per diem. The only way to know if you're going to lose or have lost any of the benefit is to go ahead and compute those numbers and put them on the tax return. And that is something that certainly we look at and see how it affects you, and I'm sure most other preparers would do the same. So even though the alternative minimum tax may limit you to some degree, I still think it's important to go ahead and to take these deductions and put them on the return. A couple of things that I've heard around the airline lately I'd like to bring to your attention. I've heard it said, and this is certainly rumor, but that the IRS is auditing a bunch of or several of the flight attendants, and where I've heard is based in Philadelphia. And supposedly these flight attendants have now talked to others and said, oh, the IRS is not allowing this per diem. They wouldn't allow it. I've run into that myself with a couple of audits where originally the Internal Revenue agent disallowed it because we didn't have quote-unquote receipts. Once I pointed out to the revenue agent the current revenue procedure, now it would be 2011-47. In prior years, it would have been earlier ones. Most of the time, that takes care of their questions as far as the legality of it. Quite honestly, I was doing one audit that was being done by correspondence for one of my clients, and when I brought up revenue procedure, I'm just going to call it 2011-47. It was a previous year, but 2011-47, believe it or not, the revenue agent asked me, what's a revenue procedure? If an Internal Revenue Service person ever says to you, what's a revenue procedure, your next word should be, I would like to speak to your supervisor. Because that's something they should be aware of. I did exactly that. I told that revenue agent I'd like to speak to a supervisor. The supervisor got on the line, and we had it settled within 5 minutes of the supervisor saying, yes, I'm quite aware of that, and yes, there are special procedures for pilots and flight attendants. So all we had to do at that point was just to document the trips that the pilot had, and then they allowed the full amount. I'm not saying that anything that I do is better than what anyone else does, but I will tell you that of the audits that I've had of my clients where the Internal Revenue Service has looked at this deduction, we have never lost 1 penny of the deduction. And there's no reason, if it's computed correctly, there is no reason why anyone should lose 1 penny of that deduction. So I just want to encourage you that even though you may hear out on the line, oh, they're not allowing you to do that, they don't allow you to do that, don't take that as gospel. I don't think any of us take airline rumors as gospel, but it is definitely and has been proven to be acceptable. I will add one other thing about that, though, and a couple of things I did want to talk about is the idea of some of the other expenses that we talked about. Before I do that, though, I did want to hit one other example that I've come across and I've heard some airline crews say is that when they went to their tax preparer, the tax preparer either said, oh, no, you can't take those OCONUS rates because you don't have receipts, or they've indicated that, oh, that's too much money, we can't take that. My advice to you is if your tax preparer says that, you just gather up your articles and say thank you very much, and you go and find another preparer, whether it be me or somebody else. I'm not trying to say you need to leave them for me, but the fact is if your preparer is refusing, and believe it or not, I've had some folks tell me that their preparers refuse to do it. If your preparer refuses to do it, you should refuse to work with that preparer. That's the bottom line. A couple of other things that I do want to hit with you, where I do have folks asked me in the past, and again, sometimes I get the comment, well, so-and-so does it. Well, so-and-so may do it, but that doesn't make it legal. And that is hotels for commuters. I run into this all the time. Folks live in Charlotte, fly out of Philadelphia, wherever they live, and they fly out of Philadelphia, let's say, and they want to take their hotel as a deduction for the night before trip or any time they have to stay up there. Unfortunately, there is no question about that. That is not deductible. And as I say, even if, Susie or Jack tell you that they've done it for years, they may have done it for years, but they haven't been audited. If you get audited in that position, you are going to lose that deduction because it is not allowable. That is a commuting expense. It is no different than someone that lives in base driving to the airport. Those expenses are not deductible. And consequently, a hotel for a commuter is not deductible at all. I've had some people say, oh, well, I'm only flying out of Philadelphia for 3 months, and then I'm coming back to Charlotte. So it's just a temporary assignment, temporary base. So therefore, I can deduct those expenses. The problem with that is you don't have a temporary bid to Philadelphia. When you bid Philadelphia, that is a permanent base bid. And the company looks at that as your permanent base bid, and thus the IRS says that's permanent. So again, even though, and I know a pilot, he's not a client. I'm not saying he may even be on this call. I think I saw his name, but he may not try to do this. I'm just giving you an example of a pilot that I know that bids Philadelphia in the winter, comes back to Charlotte home in the summer. So he knows and he's senior enough that he knows he's going to be able to get back. Well, he knows when he bids Philadelphia that he is only going to be up there 4 months, and under strict rules of the IRS, anything less than a year can be considered a temporary housing, and thus housing would be deductible. However, it's a permanent base bid. So when that bid is awarded to him for him to go to Philadelphia, the IRS looks at that as a permanent move, if you will, and therefore no expenses are available to you while you're in Philadelphia. That covers, I think, most everything that I wanted to hit in the OCONUS rates. I know it has been somewhat of a quick move through, but that's all I really wanted to do was to give you a highlight of that. And I think, Jeff, at this point, I'll turn it back over and see if we do have any questions, and then I'll make just a closing comment after that if we have any questions.
Thank you, Ed. The lines are open, so if you have a question, you're welcome to just go ahead, say your first name, and ask Ed your question. Any questions this morning? Well, Ed, usually when there's no questions, that means you covered every possible angle, and so everybody's satisfied. Right.
Well, I'm sorry, was that somebody or no? Okay. Well, again, you can certainly give us a call here at the office, 704-552-8689, if you have any questions. In closing, I do want to just mention a couple things for our clients. We are giving an iPad away at the end of tax season. We're going to give the new Retina display one, so it's a $499 value. And in order to encourage you to get your data into us as soon as possible, you will be given 3 tickets for the raffle if you get your information into us, completed information. Now, you can't bring in a W-2 before February 28th and then bring everything else in on March 14th and get the 3 tickets. But if you have all your data to us before February 28th, we'll give you 3 entries into the drawing. If you bring your stuff in during the month of March, we'll give you 2 tickets. And then if you get it to us prior to April the 15th, we will give you 1 ticket for that. In addition, with our normal referral of giving $50 off for every referral that you give to us that becomes a client, we're also this year going to give you 3 additional tickets into the drawing, and your referral will also receive 3 tickets for the drawing no matter when they bring their information in. So just want to encourage you to get your data together, get it to us as quickly as possible so we can give you more entries into the iPad drawing. And for those of you that are kind enough to give us referrals, which we certainly appreciate, we also want to reward you for that and give you a $50 off of your tax return, as well as giving you 3 additional tickets into the drawing. That about does it for me. So, Jeff, if you want to close it up with anything, then we'll just thank everyone for being and have a good day.
Okay, Ed, thanks. We appreciate the information. We want to thank everybody for being on the call. And if, again, you have a question about the OCONUS rates or any kind of tax topics and you want to give Ed a call, the office number is 704-552-8689, or you can always send Ed an email at ednewton@ednewtoncpa.com. So once again, we want to thank everybody for being on the call. Thank you, Ed. Appreciate it. And we hope to talk to everybody soon.
Have a good day.